Welcome back to Investing Talk podcast. Today we're taking a look at a question many of you might be asking. Is Wheaton Precious Metals a good time to buy now? We've gathered a stack of recent sources, articles, research, expert analysis, basically trying to help us cut through the noise, get straight to the crucial insights. Our mission today is really to distill the most important nuggets of knowledge, giving you a well-informed perspective on this fascinating company. Before we unpack everything, just a quick request. If you're finding these insights valuable, please subscribe, maybe leave a comment. Your engagement really helps us bring more valuable content to you. And hey, if you'd like us to look into a specific company for a future discussion, just leave a comment below. Also, maybe consider buying us a coffee if you appreciate our work. We'd appreciate it. All right, let's jump in. So Wheaton Precious Metals, they aren't your typical mining company, right? Not the ones actually digging for ore. They seem to operate with this almost invisible hand in the mining world. So what exactly is their unique approach, and how does that translate into their fundamental numbers?
Right. What's truly fascinating here is their streaming model. It's quite different. Unlike traditional miners who own and operate the mines themselves, Wheaton Precious Metals provides upfront capital. They invest in mining companies. And in return, they secure the right to purchase a percentage of that mine's future precious metal production. And here's the key. It's at a predetermined, low fixed cost. Think of it like this. They're kind of like a financier and a metals buyer, all rolled into one package.
Okay, so they're funding the miners and locking in a future price.
Exactly. And this strategy brings a really unique set of advantages. It provides them with significantly lower operational risk. I mean, they don't have to worry about the day-to-day headaches, right? The unpredictable costs of labor disputes or equipment breakdowns or, geological surprises that traditional miners constantly face.
Less direct exposure to those operational headaches.
Precisely. Plus, it gives them exposure to a highly diversified portfolio. We're talking gold, silver, palladium, platinum, even cobalt. And it's spread across a wide range of geographies, North and South America, Europe, Africa. That diversification, both geographically and by metal type, it acts as a pretty powerful risk mitigator.
So it's that unique model kind of shielding them from the usual cost volatility that, full-scale miners have to deal with. How do those advantages actually show up on the books in their financial statements? What are those foundational numbers telling us?
Well, they translate into some very strong financials, actually. We saw robust revenue growth. 2024 revenue hit $1.28 billion, which was a significant jump, 26.44% up from the prior year.
Wow, okay.
And then Q1 2025 revenue surged even further. We're talking about 58.5% year over year, reached a record $470 million. Now, this was significantly boosted by those higher metals prices we've seen recently, and crucially, new mine production expansions coming online, particularly from the Salobo mine.
Okay, so strong top line, but beyond just the revenue growth, what really jumped out at me in the sources was the mention of their profit margins. How do those stack up? What does that tell us about the efficiency of this streaming model?
Yeah, it's a very compelling story when you look at the margins.
Yeah.
Their net income was $889.84 million over the trailing 12 months. In Q1 2025 net income alone was $254 million. Now, while there was a slight earnings decrease, about MEX 1.58% in 2024 overall, their margins remain exceptionally strong.
And that's down to the model.
Absolutely. It's a direct benefit of their streaming model's inherently low operating costs. They're just not burdened by the massive capital expenditures or the day-to-day operational complexities of actually running a mine.
Right. And perhaps one of the most powerful financial strengths I noticed mentioned in the research, zero debt. That seems almost unheard of for a company this size, especially in this sector.
Exactly. Their financial flexibility is, it's truly a standout feature. Wheaton Precious Metals has zero debt.
Yeah.
When you look at their interest coverage ratio, it's astronomically high. It's like 2,481.79.
Wow.
Yeah. It just confirms virtually no debt burden, which, like you said, is rare and incredibly powerful. It gives them a huge advantage.
That is a huge competitive advantage. It means they're not beholden to creditors, right? They can invest when others might be struggling, and they're probably incredibly resilient. So what does this strong financial position mean for their ability to generate cash and, their future prospects?
Well, it points to solid cash generation. Their price-to-cash flow ratio sits around 35.03, which indicates they're generating healthy amounts of cash relative to their stock price. And looking ahead, analysts are overwhelmingly positive, very bullish. We're seeing a consensus price target averaging somewhere around C$124 to C$130.
Okay.
And based on 9 analyst ratings in our sources, there are 5 buy and 4 strong buy recommendations.
And no sells.
Not a single sell rating among them. 0 hold, 0 sells. Their forward PE, that's the price to earnings based on expected future earnings, is 38.16. Now, this reflects that significant earnings growth is anticipated by the market, but it also points to a premium valuation, which we should definitely dig into.
Yeah, absolutely. Given these strong fundamentals and this, unique model, the next natural question for any investor is, what's the market actually saying about Wheaton's value? Are we looking at a premium price here? And if so, is it really justified?
That's the crucial question, isn't it? Because when we compare Wheaton Precious Metals to industry averages, we definitely see some notable differences in how it's valued. For example, their trailing PE ratio comparing current price to past earnings is 65.80.
65. Wow.
Yeah, and their forward PE looking ahead is 38.16. Now, for the broader mining sector, a typical PE range is more like, 20 to 30. So this significantly higher PE suggests the market is valuing Wheaton much more expensively than traditional mining stocks. It indicates substantial future growth is already baked into that stock price.
Okay. And what about other valuation metrics, like price to book or price to sales? Do they paint a similar picture?
They do, yes, a very similar story. Their price to book, PB ratio, comparing market value to book value, is 5.53. The industry average there is typically around 2 to 3. So again, suggests it's relatively expensive compared to its underlying assets. And the price to sales PS ratio, looking at market cap relative to revenue, is 28.21.
28 compared to
An industry average of maybe 3 to 5, approximately. So this very high ratio really reflects the premium pricing. It's likely due to their unique streaming model, the lower risk, the higher margins we talked about, and those strong growth expectations.
So it sounds like the market is definitely slapping a premium on it, but maybe believes that premium is justified because of the business model and the growth potential. What about more in-depth valuation methods, like a discounted cash flow analysis? Did our sources shed any light there?
Well, detailed discounted cash flow, DCF analyses, where you project future cash flows and discount them back, weren't explicitly found in the sources we looked at. It seems analysts are primarily relying on relative valuation, comparing it to peers, even though it's kind of unique. And the consensus seems to be that despite this premium valuation compared to the sector, it's largely supported by those robust growth prospects and that significantly lower operational risk profile. It's a bit of a pay-for-quality scenario, perhaps.
Okay, that makes sense. But you could argue, couldn't you, that even with those positives, a PE of 65 or even 38 forward is kind of pricing in perfection. What's the counter argument to that premium? Or where could it potentially go wrong if those rosy expectations aren't met?
That's a really fair challenge. The counter-argument is basically that Wheaton's model deserves a premium precisely because it mitigates so many of those risks inherent in traditional mining. They don't have to deal directly with the geological surprises, the rising labor costs, the environmental liabilities that can just, plague a traditional miner.
Right.
However, you're absolutely right. If metals prices were to unexpectedly fall sharply, or let's say a major mine they stream from experiences prolonged operational issues. Remember, their success is tied to the underlying miner's ability to deliver, even if they don't operate them directly. Then that premium could quickly, evaporate.
That's a critical nuance. Their success is linked, even if indirectly. Okay, let's shift gears a bit and look at the charts. What's the price action telling us right now, and what's the broader market sentiment from a technical perspective?
Sure. So the current price is approximately $124.55. That's quite close to its 52-week high, which was around $131.82. So that indicates strong upward momentum, definitely. Though we have seen some recent sideways consolidation, it's been trading within a relatively tight range lately, kind of catching its breath.
Okay, consolidating near the highs. Where's the support and resistance?
For technical support, those price levels where buyers tend to step in, we're probably looking near previous pullbacks. Roughly around the C115 to C120 area. Resistance, meaning where the price might struggle to push higher because sellers might step in, that's near its all-time highs, around that C131 mark.
And momentum indicators, like RSI?
Yeah, the Relative Strength Index, or RSI, which helps gauge if a stock is overbought or oversold, is near 59.7. This suggests neutral to maybe moderately bullish momentum. It's not screaming overbought, nor is it oversold. It kind of suggests it still has maybe some room to run, technically speaking.
Okay, so showing strength, but maybe taking a bit of a breather right now. And what about its, let's call it its turbulence rating compared to the broader market? Does it tend to swing wildly, or is it more of a steady mover?
Well, what's fascinating here is its beta. It's 0.60.
0.60. Okay, what does that mean for investors?
So beta measures a stock's volatility relative to the overall market. A beta of 1 means it moves with the market. Below 1 means less volatile, above 1 means more. So 0.60 means Wheaton tends to be less volatile than the broader market. About 60% is volatile, roughly speaking.
Ah, interesting.
So yeah, if you're an investor who maybe gets a little seasick when the market starts bouncing around a lot, this lower beta might feel like a much more comfortable ride in your portfolio.
Right. And what about recent news or sentiment drivers?
Well, as we touched on, Q1 2025 saw that record revenue and strong earnings. That was significantly driven by higher metals prices, of course, but also those new mine streams coming online, like from Salobo. And as we mentioned, analyst ratings are overwhelmingly positive. No sell or hold ratings definitely boosts market sentiment. Our sources didn't give us specifics on, say, insider trading patterns or social media chatter, but the professional analyst community. Clearly bullish.
Okay, so beyond the current snapshot, what potential catalysts could, move the needle for wheat and precious metal, both good and bad? And what are the key risks we really need to keep in mind?
Looking ahead, there are a few important potential catalysts. First, the next scheduled earnings report is on August 7th, 2025. That will be crucial for updates on production numbers and their guidance for the rest of the year.
Always a big one.
Always. Also, the continued ramp-up of those new streams, like Salobo, that's expected to increase future cash flows as those projects mature and hit their full production potential. And then, of course, there are the broader macroeconomic events that drive precious metals prices, things like inflation trends, central bank policy decisions, interest rates especially, and, geopolitical risks. Those remain significant factors influencing Wheaton. Those factors lean positively for metals. Wheaton stands to benefit directly.
Right, but every investment has its flip side, its considerations. We've talked quite a bit about that premium valuation. So what are the main risks an investor really needs to weigh up here?
Absolutely. Despite all the positives, an informed investor always has to consider the risks. First, you've got the stock-specific risks. That high valuation we keep mentioning, it naturally presents a downside risk. If metals prices unexpectedly fall, or if there are significant prolonged production issues at one of the key mines they get streams from. Because remember, their model depends on the operational success of those third-party miners, that premium valuation could quickly deflate.
Makes sense. What about broader risks?
Then there are the sector risks. Precious metals prices themselves are just inherently volatile, right? They're heavily influenced by macroeconomic factors, interest rates, inflation, currency movements. A strong U.S. dollar, for instance, often puts pressure on gold prices.
And macro risks specifically?
Specifically, things like rising interest rates globally, or maybe weakening demand for precious metals if economies slow down significantly. Those could depress prices and, in turn, hit revenues for the company. Now, on a more positive note regarding risk mitigation, that beta of 0.60 we discussed does suggest relatively lower volatility compared to the market overall.
Yeah, that's a buffer.
It is. And an average daily trading volume around 600,000 shares implies pretty good liquidity, meaning it should be relatively easy to buy and sell without massively impacting the price yourself. So while risks definitely exist, there are some mitigating factors built in.
Okay, we've really unpacked a lot of information here, covered their unique model, the strong financials, that premium valuation, the technical picture. Let's try and bring it all together for you, our listener. What's the final assessment? Is now, a good time to consider buying Wheaton precious metals?
All right, the bottom line. Based on our sources, if we were to kind of score Wheaton precious metals, it probably comes in around a solid 7.5 out of 10.
7.5, okay.
Yeah, the fundamentals are undeniably strong. You've got excellent revenue growth, that incredible zero debt position, really high margins, solid cash flow, all underpinned by that effective lower risk streaming model. However, the valuation is a key consideration. It is significantly premium. Those high PE and PS ratios reflect very high growth expectations already priced in.
Right.
Technically, we see that moderate bullish momentum holding support around C$115, with resistance up near its highs around C$131. Sentiment and news flow are very positive, driven by that strong analyst consensus and the recent record earnings. Catalysts for future movement include those upcoming earnings, the continued ramp-up of mine expansions like Salobo, and of course the broader macro trends in metals, prices, inflation, central bank actions. The primary risks really stem from that high valuation, which demands continued strong performance and the inherent volatility of metals prices. plus their dependence on the operational success of their mining partners.
Okay, so considering all of that, what type of investor profile does Wheaton Precious Metals seem most suitable for right now?
Well, it seems generally preferred for long-term investors. We're talking about individuals who are willing to hold through the natural ups and downs of commodity price cycles and who have real conviction in the company's long-term growth story, particularly from its ongoing mine expansions.
In short term.
For short-term trading, it's potentially possible, given the stable momentum we observed. But it's inherently riskier. The current price is near its highs, and you have all those broader macro uncertainties influencing metals prices day to day.
Okay. So if someone is considering an entry based on the sources, what might be a reasonable price range to look at? And what about managing risk?
Yeah, if you are considering getting in, our sources seem to suggest a potential entry price range between C$110 and C$120. This offers maybe a little bit of a margin of safety as it's closer to those technical support levels and a bit below the recent highs.
And risk management. Stop losses.
For traders looking to manage risk, definitely consider a stop loss. Maybe around 8 to 10% below your entry point. For example, if you bought at C$110, maybe a stop around C$110 to limit potential downside if metal prices suddenly drop. And for taking profits, maybe consider partial profit taking near that resistance level around C$130. And of course, adjust based on how momentum develops or if significant news comes out.
Right. Stay flexible.
Exactly. So, in summary, Wheaton Precious Metals looks like a fundamentally strong, well-positioned precious metals streamer. Excellent margins, zero debt. Those are big pluses that help justify its premium valuation. But it's likely more suitable for investors with a longer time horizon, people who can tolerate that commodity price volatility and really believe in its unique, less risky business model.
That's certainly a lot to consider. So as you reflect on Wheaton Precious Metals, maybe think about this. What broader global economic shifts, perhaps unexpected deflation instead of inflation, or maybe radically different central bank policies than anticipated might make you completely reconsider your stance on precious metals as an asset class altogether? That's something to perhaps mull over as you continue your own learning journey. Thank you so much for joining us on Investing Talk podcast. We really hope this analysis helps you feel more informed and more confident in your decisions. We'll be back soon with another detailed look at what matters to you.